The financial year is coming to a close, and businesses must ensure GST compliance to avoid penalties and errors. This checklist will help you stay on track and prepare for the new financial year 2025. Outward supplies compliance. If your turnover has exceeded 5 crore rupees in any financial year since July 2017, e-invoicing is mandatory from the new financial year. If you export goods or services without paying tax, do not forget to renew your Letter of Undertaking, commonly known as LUT. Businesses must also assign a fresh invoice series for invoices, credit notes, and debit notes to maintain compliance. Reconciliation is crucial. Ensure that your sales figures match across GSTR1, GSTR3B, and your books of accounts. Any errors, such as incorrect GSTIN, place of supply, or invoice values, must be corrected before the October deadline. Verify that all issued e-invoices and e-way bills match your books to avoid discrepancies. Check your GST liability on the GST portal and clear any outstanding dues before the financial year closes. Issue any pending credit notes for the previous financial year before October and report them before the November deadline. Input tax credit and reverse charge compliance. Reconcile the input tax credit, also known as ITC, in your books with GSTR3B to ensure that no eligible credit has been missed or misreported. Cross-check ITC in GSTR to be with your books and claim any missing credit before the November deadline. If you have paid integrated GST or IGST on imports, verify that it is correctly classified and claimed in your returns. Common ITC reversals must be made for exempt supplies and non-business expenses as per GST rules. If any goods were lost, stolen, or damaged, reverse the ITC claimed on them. Ensure that your electronic credit ledger, cash ledger, and reclaimable ITC balances match your books. For expenses attracting reverse charge, ensure that taxes have been correctly paid and reported. Other key compliance areas. Businesses that distribute input services across multiple branches should check whether Input Service Distributor, or ISD, registration is required from April 2025. Ensure that all vendors who are liable for e-invoicing comply with the regulations. If you deal with goods transport agencies, also known as GTAs, confirm whether they have opted for forward charge. Otherwise, the recipient must pay tax under reverse charge. Check for any pending GST TDS or TCS credits and claim them before the due date. Goods sent for job work must return within the permitted time frame, which is 1 year for inputs and 3 years for capital goods. Report such transactions in Form ITC-04. If goods are sent on an approval basis, they must either be returned or sold within 6 months to avoid compliance issues. Small businesses opting for the composition scheme must file Form CMP-02 by March 31st. Businesses with a turnover of up to 5 crore rupees can choose quarterly GST returns under the QRMP scheme. Opt in or opt out accordingly. For exporters, ensure that exports are completed within 3 months from the invoice date, and foreign payments are received within 1 year to comply with Rule 96A. Check for any pending GST refund claims and apply within 2 years from the relevant date to avoid loss of eligible refunds. This checklist helps businesses ensure compliance, correct errors before deadlines, and start the financial year smoothly. Proper planning avoids penalties and maximizes tax benefits.